Hello everyone, welcome back to Mindful Investing. The market is sitting at all-time highs, and while many stocks look overextended, I've identified a handful of stocks that I believe are still undervalued. These picks are based on my personal stock prediction model and a thorough technical analysis. Some of these names you may recognize from our prediction series, and a few are already part of my portfolio. Stick around until the end where I'll show you how to access the full spreadsheet with all the data and forecasts. Let's dive into each stock one by one. The first one in our list is Salesforce, ticker symbol CRM. Salesforce is a leader in customer relationship management software. Its revenue is subscription based and it offers cloud based tools for sales, marketing, and service automation. They have a total cash on hand of $8.8 billion dollars with total debt of $11.3 billion dollars and a free cash flow of $12.4 billion dollars. Technically, CRM has strong support around the $230 to $240 range, and on a daily chart, it's already trading below its 200-day EMA and has been consolidating for over 6 months now. It could break out post earnings, in my opinion. Even on the weekly chart, it's below its 50-day EMA. Based on my prediction model, it has an upside of 83% over 5 years and 13% in 1 year. Though the fundamentals aren't the strongest, the technical setup looks compelling here. So, this is definitely something to watch out for short term gains. Next up on our list is ASML, a company that's absolutely critical to the semiconductor supply chain. ASML is the sole supplier of EUV lithography machines essential for advanced chip manufacturing. We already covered ASML's business model and price targets in our stock prediction series. I'll give the link in the description below. And now coming to their fundamentals, they have a total cash on hand of $7.2 billion dollars with total debt of $3.6 billion dollars, and they have a free cash flow of $9.2 billion dollars. And technically, it's below all the major EMAs on the daily chart and approaching the 200-day EMA on the weekly chart. I'm expecting a turnaround from the $700 range. Fundamentally, my model predicts a 124% upside in 5 years and 17% in 1 year. I'll likely open a position in ASML pretty soon. Now let's shift gears to another software giant, and that's Adobe. Adobe offers creative and document cloud services, key tools for digital marketing and publishing. They have a total cash on hand of $4.9 billion dollars with a total debt of $6.5 billion dollars, and the free cash flow is $9.4 billion dollars. Adobe is trading below the 200-day EMA on both daily charts and weekly charts. I think this is the bottom for Adobe unless we see a sharp market pullback. My model predicts 80% upside in 5 years and 13% in 1 year. Now, onto a company I already own and believe in, and that's FICO. FICO is a leader in credit scoring and analytics used by most banks and lenders in the US. I've covered FICO in our stock prediction series, so please check it out. They have a total cash of $151 million dollars and total debt of $2.3 billion, dollars, and they have a free cash flow of $677 million. Dollars. Technically, it's below all major EMAs on the daily chart and below the 50-day EMA on the weekly chart. I already hold this stock and still see a 215% upside in 5 years. I plan to add more under $1,400. Now, shifting from analytics to coffee, the Dutch Bros has been brewing some serious momentum here. Dutch Bros, a fast growing coffee chain expanding rapidly in the US market. They have a total cash on hand of $316 million, dollars, total debt of $1 billion, dollars, and a free cash flow of $32 million. Dollars. Technically, it's sitting right on the 200-day EMA on the daily chart and just touched the 50-day EMA on the weekly, with 353% upside in 5 years and 36% in 1 year. This is a strong growth story. I did also cover Dutch Bros in detail in our stock prediction series. Now let's take a look at the fashion focused e-commerce company. That's Revolve Group, ticker symbol RVLV, an e-commerce company focused on fashion for millennials and Gen Z. They have a total cash on hand of $299 million dollars with total debt of $44 million dollars and a free cash flow of $27 million dollars. Technically, it's trading below major EMAs on both daily and weekly charts. My model shows 127% upside in 5 years and 17% in 1 year. It's a decent return opportunity for me. Now let's talk about enterprise SaaS, Workday. Enterprise software for finance and human resources, competing with Oracle and SAP. They have a total cash on hand of $987 million dollars with total debt of $2 billion dollars and a free cash flow of $2.3 billion. Dollars. It's been consolidating and technically looks strong with 137% upside in 5 years and 19% in 1 year. In my opinion, it's a solid SaaS play. Switching to one of my recent buys, a big performer in the education space. That's Duolingo, a leading language learning app aggressively expanding into education. They have a total cash of $886 million dollars with total debt of $54 million dollars and a free cash flow of $288 million. Dollars. I own this and covered it in our prediction series already. Technically, it's below the 200-day EMA on the daily chart and the 50-day EMA on the weekly chart, showing a 537% upside in 5 years and 45% in 1 year. This setup remains strong. Let's continue with another tech giant. This one's all about automation. From education to enterprise software, ServiceNow is one of the most consistent performers in the tech space. ServiceNow, it's a leader in digital workspace automation for enterprises. They have a total cash on hand of $3.1 billion dollars with total debt of $2.4 billion dollars and a free cash flow of $3.8 billion. Dollars. My model shows 191% upside in 5 years and 24% upside in 1 year. It's a reliable long-term performer. And next up is the name you might not expect, and that's Yelp. Ticker symbol YELP, a digital local business platform with ad based revenue. They have a total cash on hand of $222 million, dollars, total debt of $33 million, dollars, free cash flow of $270 million. Dollars. Technically, it's below the 200-day EMA on both daily and weekly charts, with 149% upside in 5 years and 20% upside in 1 year. Yelp looks promising despite low excitement. And to wrap up our list, the last one is OKTA, a leader in identity and access management solution for enterprises. They have a total cash on hand of $494 million, dollars, total debt of $947 million, dollars, and free cash flow of $754 million. Dollars. Technically, it's trading right at its 200-day EMA on both daily and weekly charts, with 117% upside in 5 years and 16% in 1 year. This could be a solid entry point. That wraps up our list of undervalued stocks. While the market is at all time highs, opportunities like these still exist if you are willing to dig deep. I already hold FICO and Duolingo and plan to add more on dips. We have already done stock prediction videos on ASML, FICO, Duolingo, and Dutch Bros. So check those out if you haven't yet. And all the data, including price targets, fundamentals, and technical levels, is in the spreadsheet I've built. Make sure to check it out in the description. And as always, please like the video and subscribe to support the channel. It really helps more than you know. Thanks for watching, and I'll see you in the next video.